There's a fundamental difference between rich people and wealthy people. Rich people make and spend money, wealthy people save and invest it. In purely economic terms, your net worth is the sum of your assets minus liabilities. If you borrow $1 million to buy yourself a house and a car, all the while repaying your loan at a 4% interest rate for the rest of your life, you're rich but not wealthy. One of the main keys to increasing your net worth is understanding how money works. You've probably already heard all the classic advice before. Max out your 401k, compound your money in the stock market, save whatever percentage of your income. In this video, we're focusing on ways to increase your net worth you probably haven't heard about before, but which can be very efficient if you stick to them and play the long game. Number 1, get rid of your liabilities. As we've seen earlier, your net worth is based on a simple formula. Your assets minus your liabilities. Your assets are what you own, your liabilities what you owe. And the thing is, people often look at ways to make more money in order to increase their wealth. But getting rid of debt is also a great way to do just that. Say you have a $100,000 net worth, but $10,000 in repayments left on a bank loan. This means you'd be worth $90,000 if you had to liquidate everything because your bank is missing $10,000 from you. But if you manage to get rid of that loan by paying it off faster, you've increased your net worth by $10,000 because you remove a liability from your $100,000. It's simple math, but many people overlook debt when looking at ways to make money. The same goes for any assets that are costing you more than they're making. A house, a car, a monthly subscription. If you can decrease your debt on those things, you increase your net worth, whether in cash or on paper. Number 2, own your business and multiply it. If you manage to create your own business and drive some sort of recurring revenue from it, I have great news for you. Your business could be worth a lot more than your revenue, and that's thanks to an amazing capitalist invention, earnings multipliers. In the 1980s, companies started buying each other more and more, sometimes at a loss. A company would buy another non-profitable company in fear that it could become a bigger competitor or in the hopes of turning the business around and making it profitable. The problem was that nobody had any idea how much they should pay for a business that wasn't making any money. And that's when EBITDA was invented. EBITDA is an acronym that stands for earnings before interest, tax, depreciation, and amortization. EBITDA is an indicator that is often used by investors or prospective buyers to measure a business's financial performance. So when looking to put a price on your business, potential buyers look at the EBITDA and multiply it by a number based on which industry your company fits in. As an example, Adobe recently announced the purchase of Figma for $20 billion, but the company is only making $400 million per year. That's a crazy 50x multiplier. And so on a much smaller scale, you can look at marketplaces like flippa.com to get a feel of how much small online businesses can sell for based on how much they're making. Again, your multiplier will mostly depend on the industry you're working in. Increase your home equity. If you're lucky enough to own the place you live in, whether a home, an apartment, or even your own offices, you probably have a mortgage to pay off. And that's where there is amazing potential to increase your net worth much faster than people who don't own real estate. Many people don't understand the power of equity versus debt. Of course, when you have a mortgage, you owe money to a bank and you may even have gotten a bad rate on it for whatever reason. But borrowing money in order to buy the place you live in gives you the option to gradually increase the equity in your real estate. Now, what is home equity? It is the value of a homeowner's financial interest in their home. In other words, it is the actual property's current market value less any liens that are attached to that property. The quicker you pay off your debt, the faster you increase your equity in your home and consequently your net worth. Here's a quick example. Let's say you buy a house for $300,000 with a 10% down payment, so that's $30,000. At the time of purchase, your equity in your house is equal to the down payment because you haven't paid anything towards the mortgage yet. And as soon as you make your first repayment, you increase your equity and there's your net worth by the amount of your payment. So if you manage to repay your mortgage quicker by saving more cash to invest in your house every month, you'll increase your net worth quicker. Now, of course, the trick here is that not all banks will allow you to repay your mortgage faster because your banker is happy to have you pay for as long as you can with your bad interest rate, right? So unless your financial situation increases drastically and you can just say, screw it, I'll pay the fees, usually you will have to either refinance or pay a lump sum towards the mortgage, sometimes at a small cost, but at a smaller cost than if you had to pay for 30 years, for instance. Number 4, buy land. Here are the official world population projections from the UN website. 8.5 billion by 2030, 9.7 billion by 2050, and 11.2 billion by 2100. This is going to cause two main issues: resources and space. In developed countries, the land is usually not needed to build more housing infrastructures because the population is actually declining there. Instead, it is sought after to extract resources from the ground or to set up factories for booming industries. But as a landowner, you don't even have to worry about any of this. You don't have to worry about what they're going to do with your land. You just have to buy a plot of land and wait for it to increase in value. Even in countries like the Netherlands, for instance, where the price of 1 hectare of arable land averages an insane 69,632 euros, buying an empty plot of land is still cheaper than buying a house there. So if you have extra cash to spare or have room for some leverage with your bank, it's a great way to increase your net worth as well. In developing countries, the land is needed both to extract resources from the ground as well and to house the booming population. If you can get your hands on a piece of land in places like Africa, the Middle East, or Southern Asia, you just have to wait for a few years to sell it for a profit or to invest more locally, because in a world dominated by profit at all costs, let us not forget that helping local populations is important too. Number 5, buy the dip. The current economic crisis is setting up a massive investment opportunity in low-cost index funds across the market. All those index funds will most likely regain in value over the next 3 to 5 years. It's always hard to anticipate the right moment to invest, but with the S&P 500 having lost 20% of its value since the beginning of the year, investing in it now wouldn't be a huge risk. Even if it drops an extra 10 to 20%, you would probably break even within the next 1 to 2 years. This opportunity is here because we're going through unprecedented economic times, at least in our modern world and for the past 30 years. This doesn't mean that it's the only opportunity ever. There have been tons of opportunities before, and there will be many others down the line in the future. There are buying opportunities every year, every month. They're just really hard to spot. And the best way to spot them is to choose one area or industry of expertise and to do your homework on it. Look at what companies are losing value in that niche, what are the headlines saying in the news, what technologies are about to change the game in that specific industry. There are dips everywhere, every time. You just have to think forward to spot them and to do your homework. Well, I'll give you a quick example on that. 5 years ago, I bought my first e-reader and I became fascinated by the e-ink technology. Then came e-ink tablets, and I also started to notice more and more grocery stores switching to e-ink displays to show prices in shopping aisles in supermarkets. Ever since I came across the e-ink technology, I have believed it will change the way we interact with everyday devices like never before. I've researched about it and I've learned that one of the biggest manufacturers of e-ink based component is E-Ink Holdings, which is listed on the Taipei Exchange in Taiwan. And since I've started researching this buying opportunity, this is how the company's stock has performed. Not bad, right? Unfortunately, I was never able to buy this specific stock because it is listed in Taiwan and not a lot of brokers offer to trade on this market unless you live in the country. But you get the point. Pick something you're interested in and study the opportunities that lie there in the industry, in the niche, maybe just in one company. This will give you an edge over other people in a specific field, and you don't even have to be the best in the field. You just have to put in the work, and not a lot of people do that, trust me. And once you see a dip, so that's like a dip is a right moment to buy. It's not necessarily a big drop in value. It's just a buying opportunity, right? Once you see that, go for it. Play the long game and hopefully watch your net worth increase. Thanks a lot for watching. As always, it means the world. I'm sorry this week's video is a little late. I've been really busy. Sorry, but I will keep posting one video a week. That's not going anywhere. Don't forget to like, subscribe, leave a comment in the video down below if you have any thoughts on what I've just talked about. And yeah, thanks so much. I'll see you next week for the next video. Enjoy the journey you're on.